Let's start with a significant deal for Banco Pine, the German development bank DEG taking a 2.8% stake. What are the implications of that deal?
Well, DEG has been a long partner of the bank, a long-time partner of the bank. We have a relationship since 2006 that started with subordinated debt, followed up with other types of financings. We always had DEG as a very significant partner, and I think that this transaction actually enhances that partnership in a sense that we can bring more types of financings to the clients, and we can actually lever upon what DEG can bring to the table in terms of those financings, being long-term, being for financing of projects in the various sectors that we are able to originate and serve well in Brazil. So I think it really enhances the franchise in that sense.
And market commentators have observed that this might attract more investors to Banco Pine and could improve the franchise value of the bank.
Well, I think it really does improve because, you know, it's actually a portrait of what we actually want to do with our clients. We want to actually bring more financing alternatives to them, bring more products to the table for them so they can actually develop their activities with the proper financing. So I think it enhances the franchise for sure. I think DEG has a very strict due diligence process. It's been doing that with the bank for a while. It's their first equity investment in Brazil, in a Brazilian financial institution. So we think that really, you know, brings a lot to the table for the clients and for the bank and for DEG.
What's the uniqueness of Banco Pine in this sector? What makes the bank stand out amongst its competitors in Brazil?
Well, we are a relationship bank. So first thing is that we have diversity of product. So we want to serve the clients well, not only with credit, which is of course, I mean, we are a commercial bank, so credit is an important product, is the flagship product. But not only that, we serve clients with hedging alternatives, we serve clients with the capital markets, we serve clients with asset management, with advisory, with M&A. So we want to provide a complete range of products and services to our client, to our target client. The way we do that is that we actually pay close attention to them. So we have a very small number of clients per originator. We want the originator to have a very strong relationship with the clients and actually advance any type of needs that the client might need or might have. We want the originator to understand the client's balance sheet, to be really very close. And by paying close attention, by offering diversity of products, and by being fast, which is one of the things that we think we have a clear advantage on, we serve the clients in a unique way, and we increase our importance towards the client.
You move fast, as you say, but you have a unique policy of evaluating each transaction. How does that work?
That's true. I mean, all transactions that we bring to the bank, we need to have all the information from the clients, and the fact that we have that proximity with the client makes us have more information about the client. So the more information you have on the fastest way, the easiest it is for us to reply back. So it's part of the model to have, you know, more information, being close. We have credit committees here at the bank that take place twice a week. So we have a very flat structure in the sense that all the members of the committee are reachable at any point in time, at any given day. So all the people are here. It's a lean bank. All the structures are very lean. And we can move very fast to be able to decide on a yes or a no to a client.
So what's your approach to risk management?
We're always conservative in risk management in various forms. First of all, the portfolio is always well collateralized. We have over 80% of the portfolio collateralized, and this is a ratio that's been kept for a while now. In terms of liquidity, we are always very conservative on liquidity, on both actual liquidity, cash on hand, and also on the ALM that we do. So we always, you know, to give you an example of that, today we have 18 months of duration on the liability side for 15 months of duration on the asset side. So we're always very conservative in terms of levering up the balance sheet. So risk management is actually one of the pillars of the management of the bank.
Finally, looking ahead, how is Banco Pine positioning itself to take advantage of the remarkable momentum in Brazil's economy?
Well, we want to keep serving the clients well. We want to keep paying close attention to them. What we do here at the bank every day is to think how we can serve a client better, how we can bring more financing alternatives that are longer in nature, they are better in terms of conditions to a client. How can we help a client hedge exposures in their balance sheets and bring predictability to their balance sheets, keeping a stable real cash flow. We want to bring the clients to capital markets and help them actually access the capital markets. So paying close attention, continuing to be fast, and offering a diversity of products to our client base. I think that's the model.
Norberto Zaiet Junior, thank you.
Thank you very much.